All right, let's get going. James, you've started recording, I trust.
Yes, yes.
All right, excellent. Good afternoon, everybody. Welcome to a Macro Insights webinar from DBS Group Research. Taimur Baig, Chief Economist. I have the distinct pleasure of moderating what promises to be an excellent and fascinating discussion on China's Greater Bay Area. Some descriptive statistics that make you feel how striking this entire development is, and then some outlook-related discussion on how big and how far this entire initiative can go. I have the pleasure of introducing to you Mo Ji, our China Hong Kong Chief Economist. Hi, Mo.
Hello, Taimur.
And Mo's colleagues, Nathan Chow, Senior Economist. Hey, Nathan.
Hi, Taimur and everyone.
Samuel Say, our economist and strategist. Hi, Sam.
Hello, Taimur, and hi, everyone.
And Byron, our newest member of the team. Hey, Byron.
Hello, Taimur. Hello, everyone.
Great. Great to have all of you guys connecting in from Hong Kong. I'm here in Singapore. We published a 40-page report, the link of which I will post at the chat section of this webinar. You can look at the report, but you will get the gist of it from our authors, starting with Mo, followed by Sam, and then followed by Nathan, and then Sam. We will have some time for question and answer. The most efficient way of doing it would be for you to write down your comments and questions in the chat section of the WebEx window on the bottom right corner. I will monitor them through the course of the call. I will now disappear, take a step back, and Mo will basically run the show. And toward the end, when we have time for question and answer, I'll come back. But until then, Mo, take it away.
Thank you, Taimur, for your kind introduction. Hello, everyone. Thank you for your time for joining our WebEx. Greater Bay Area is now developing into China's economic powerhouse and one of the most fast-expanding economic Bay areas globally. Today, we will be covering 6 impressive developments in the Greater Bay Area. Number 1, strategic infrastructure development. Number 2, advancement in high-tech manufacturing. Number 3, accelerating new energy development. Number 4, the rising trade and financial flows. Number 5, robust private consumption. And number 6, relatively resilient property market. I'll be covering the first 2 sessions. Nathan and Sam will cover the rest of it. Next page, please. Greater Bay Area, in terms of economic transformation in the past 3 decades, is amazing. The left-hand chart, which actually is made by Taimur, where in terms of the real GDP, Shenzhen grows 77 times. In the past 30 years, Dongguan 73 times, Guangzhou 41 times, West Hong Kong grows 4 times. So now we see Shenzhen and Guangzhou's GDP already surpassing Hong Kong, and GBA as a whole achieving $2 trillion GDP, 11% of China's total GDP, but only 1% of China's total land area. Among the 4 Bay areas, GBA now ranks second after the New York Bay Area, but before Tokyo Bay and San Francisco Bay. It is on track to surpass New York Bay very soon. Next page, please. Next page. In terms of infrastructure integration for the Greater Bay Area, we see Greater Bay Area has ambitious transportation developments over the past 5 years have greatly transformed the region. Immense infrastructure upgrades have connected major cities with a seamless one-hour living circle, improving business and lifestyle opportunities within the Bay Area. If you see the left-hand side chart, daily average Hong Kong residents' departure via the Hong Kong-China Custom has reached 1/4 million in April, and the past Dragon Boat 3-day long weekend, in total, 1.3 million of Hong Kongese went to China through the border. Also worth to note, projections indicate the Greater Bay Area will host 7 airports, with 17 total runways by 2035, serving 420 million annual passengers and surpassing 20 million tons of cargo. Coordinated infrastructure investments are positioning the GBA as a global aviation leader in Asia. If you look at the right-hand side chart, Hong Kong's cargo handling is leading and higher than Memphis, Shanghai, and many other cities globally. Next page, please. Well, yes. So for the GBA's number one symbol, it is the technology hub. First, its deep-rooted, innovative culture. The Greater Bay Area is home to many of the headquarters of China's leading tech companies. Guangdong's innovation capabilities rank number one in China for 7 consecutive years, with more than 75,000 high-tech enterprises and startups in fields such as AI, 5G, autonomous driving, and the Internet of Things. The number of R&D researchers has doubled in the past decade, reaching close to 1 million researchers in Guangdong, highest among the whole nation. In 2023, Shenzhen's expenditure on R&D reached 5.81% of its GDP, a notable increase from 3.48% in 2010, with 94.9% of the total R&D investment originated from the companies, but not the government. Next page, please. Expanding the high-tech manufacturing hub. Advanced and high-tech manufacturing industries continue to be the key areas of investment focus by the government, but also within the Greater Bay Area. All industries under high-tech manufacturing category have seen more than 20% growth in fixed asset investment in 2023, and the trend extended in 2024 so far. Computer and office equipment grows at 65.8%, whereas the national average only at 10%. Medical equipment grows at 51% in January-April in 2024, whereas the national average at only 14.8%. Shenzhen has seen a notable increase in manufacturing FAI so far this year. On the chart, you can see, of which high-tech manufacturing surged 106.1% in January-April, well supported by the investment in computer and telecommunication industry. Next page, please. The green and low carbon development, GBA, is expected to maintain its leadership in China's green and low carbon industries. Shenzhen's green and low carbon sectors' contribution to total strategic emerging industries increased from 7.2% in 2017 to 15.3% in the last quarter of 2024, which means it has doubled. Among the strategic emerging industries, new energy-related industries grew by 13.5% in 2023. New energy vehicles sales in Guangdong recorded 916,000 units in 2023, an increase of 21.2% year-over-year. Guangzhou's new energy vehicle sales topped the list with a 36.7% increase from the previous year. The EV penetration rate of Guangdong reached 31.4% in 2023, where Shenzhen and Guangzhou remain to be the highest rate in the province, which is far leading than Shanghai or Beijing. Moving forward, EV sales expect to grow 10.9% CAGR in the next 2 years. The share of EV production to total automobile production is expected to grow from 5% in 2019 to 55% in 2026, which is a 50% increase. It's amazing. The volume of green and sustainable bonds arranged in Hong Kong, which is on the right-hand side chart, reached $28.3 billion in 2023, representing over 1/3 of the Asian green and sustainable bond market. As an international financial center, Hong Kong will help to attract international green funds to invest in mainland projects. So we see as a tech hub, for the Greater Bay Area, that's really its signature. That's something we always need to bear in mind. Now over to Nathan. Thank you.
Okay, thank you, Mo, and good afternoon, everyone. As Mo just mentioned earlier, infrastructure development in the GBA has been so amazing over the past few, especially over the past 5 years, right? Port, bridges, warehouses, all this infrastructure are in fact very crucial in facilitating trade within the greater Bay Area. So in the next section, we're going to talk about trade. And to illustrate this growth, let's look at some numbers. In the first quarter of this year, 2024, GBA saw massive growth in trade. We're talking about 12% more trade compared to last year, totaling around 2 trillion RMB. High-tech trade grew even faster at 17%. Imports of semiconductor equipment more than doubled. So all this is big for supporting the electronic industry there in the GBA. Amongst China's top 10 cities in terms of trade, 3 of them actually coming from the GBA, Shenzhen, Dongguan, and Guangzhou. And Shenzhen really stands out as the star here. As you can see on the chart on the left-hand side, it hit over 1 trillion RMB in trade in first quarter of this year, growing nearly 30%. Shenzhen right now is China's number 2 trading city after only Shanghai. And in terms of exports, its exports jumped by about 28%, largely driven by traditional sectors like furniture, textiles, and electronics. It's offsetting the moderate drop in exports of new energy vehicles and batteries. And in terms of trade partners, Shenzhen's biggest trade partner is ASEAN, which grew by almost 40%. And it also saw the fastest growth amongst all Chinese cities in trade with Belt and Road countries. So Shenzhen is clearly expanding its global reach. Other cities like Dongguan and Guangzhou also saw strong growth, but not as strong as Shenzhen, but is still encouraging. So the whole region is really powering forward. And a key driver of this growth is the booming cross-border e-commerce. And again, in this field, Shenzhen also hit new records here, accounting for about 20% of China's total cross-border e-commerce because of its embedded tech ecosystem. There are over 150,000 online exporters in Shenzhen, and many global e-commerce companies have also set up shops over there in Shenzhen. So what the e-commerce platforms do today is that they are offering more and more what we so-called full service options, so that the local manufacturers can just focus on manufacturing the products, which is what they do best, right? And the platforms take care of everything else, like logistics, marketing, branding, and customer support. So in the past, these local, domestic, sometimes small producers, they could only make stuff for big brands, or in other words, they are OEMs, right? But right now, e-commerce platforms lowered the barrier for them to sell online directly. So this is opening up new sales avenues for these local manufacturers, domestic producers to reach customers, not just in China, but also overseas. And on top of that, AI is also helping. For instance, by tracking things like what products customers ask about most in emails. For instance, if a customer clicks on search more than pants on the website, the AI captures this preference. It can then automatically send customized email promotions, coupons for products it predicts the customer will like based on their profile. Fascinating. Okay, so this whole integration of manufacturing and e-commerce plus AI just gives the GBA a competitive edge in trade. And we can also see this in the rising global popularity of Chinese shopping apps. Last year, among the top 10 most downloaded global shopping apps, 5 of them originated from China and 2 from Guangdong. Okay, so looking ahead, demand for GBA's products, goods will just keep going up. That is almost for sure. Their products are so affordable with very good quality and it's not expensive, right? So, which is awesome given inflation has been squeezing people's wallets in other parts of the world, right? And in terms of policy measures, the local governments there in GBA have also been bringing new policies to make shipping and trade a lot easier. For instance, they set up these new express centers that make customs a breeze and lower the cost for e-commerce sellers shipping stuff overseas. There's also this huge new warehouse in Shenzhen that allows them to send package from the ports to Hong Kong within the same day. Packages to Macau is even faster. We are just talking about a few hours. Okay, so that's why at the very beginning I said that all this infrastructure and transportation improvement facilitate trading activities in the Greater Bay Area. All right, so let's turn to the next section. So in the next section, we'll take a look at the Greater Bay Area in terms of its role as a financial center. So what makes the GBA unique is that, in terms of financial development, it has a distinctive setup with both onshore and offshore financial centers coexisting side by side. So meaning companies can raise money in either RMB or Hong Kong dollar, depends on their needs. Shenzhen and Hong Kong have stock exchanges that are among the top destinations globally for IPOs, right? For example, Shenzhen attracts a lot of tech and new economy firms. All the big players have set up shops over there. The Shenzhen Stock Exchange has become this go-to spot for new economy and high-tech companies to raise funds, especially the Chinese market, which is the China's version of Nasdaq. It is totally crushing it as one of the most active growth enterprise markets worldwide. It's like a hub for small and mid-sized firms, fast-growing companies, and industries that are just starting to take off. And on the other hand, Hong Kong is also a very popular place for biotech firms and other innovative companies. And of course, Hong Kong is not just an IPO center. It is also a super important hub for foreign investments, both money coming into the mainland and money going out. So for example, when foreign companies want to invest in Guangdong, most of them go through Hong Kong. Last year, if I'm not mistaken, 80% of foreign money flowing into Guangdong province passed through Hong Kong first. And vice versa. Over the past decade, China has been pumping cash out into other countries, right? So just like what you can see on the right-hand side here, around 60% of that outbound Chinese investment was funneled right through Hong Kong, the red portion, the red bar, all right? So that is why so many Chinese companies are setting up their Asia headquarters or global headquarters in Hong Kong to manage their overseas operations. It is more convenient for them to move money around in Hong Kong, to fund cross-border deals, to handle trade, finance, transportation, everything. And as a result of all this, the amount of Chinese currency, the offshore RMB or CNH in Hong Kong is right now skyrocketing. It climbed by more than 30% in the past year, the CNH deposit, which also shows how important Hong Kong is for, internationalizing the RMB. Okay, so we just talked about IPO. We just talked about the, how Hong Kong acted as a platform for money going out and going into the mainland, right? And the next spotlight is the wealth management business, which is another area bringing major opportunities. There's a large and growing market of high net worth individuals in Guangdong seeking investment options. According to the latest survey, there are about over 300,000 wealthy families in Guangdong needing investment vehicles, and about 50% of them are concentrated in Shenzhen and Guangzhou. All right, and as you can see on the right-hand side here, more and more of them are participating in the Wealth Connect scheme between Hong Kong and the mainland China, which provides access to offshore wealth management products in Hong Kong so that they can right now buy funds domiciled in Hong Kong. They can buy bonds classified as low to medium risk. And going forward, we should expect increasing engagement in Wealth Connect for many reasons. One of them is that the investment quota has been increased recently. The list of eligible products has also been expanded, and the investment threshold has also been lowered. And perhaps more importantly, the Chinese high net worth individuals, for them, Hong Kong is pretty much sure expected to remain a highly attractive overseas location to invest their money, for the need of, diversification, access to foreign assets, currency stability, and some of them have planned for education overseas or even immigration. All right, so I can see that I just have a few seconds left. So let me wrap up by emphasizing the main takeaway here. Hong Kong has huge opportunities across banking, wealth management services, and professional services to capitalize on such growing investment demand from other GBA cities. Okay, so I'll now pass to Samuel, who will talk about consumption.
Thank you, Mo, and thank you, Nathan, for a very detailed presentation on the GBA overview, new economies, and also the financial sector. So for this session, I will cover the old economy side, so the consumption and the relatively resilient property sector. So may I turn to the next page, please? Okay, so for the consumption, there is both cyclical factor and structural factor that explaining the resilience of the consumption sector of the Greater Bay Area. So for the cyclical factor, as we all know, the relatively strong Hong Kong dollar at the moment is attracting the Hong Kong tourists to go to mainland, especially the GBA, to spend. So as we can see in the chart from Mo's section, the outbound tourists of Hong Kong has been outpacing the inbound tourists. So and then on the structural factors, we see a growing middle class and the high value added services sector, as well as a healthy population mix, will continue to support the consumption of GBA. So for the chart on the left-hand side here, as we can see, Shenzhen and Guangzhou, as well as Guangdong province itself, the share of tertiary industry in their GDP has been higher than the rest of China. So such high value added services sector is creating tremendous wealth and income for Guangdong, and especially the two major cities here. So the GDP per capita of Guangzhou and Shenzhen is now at 23 and 27 thousand US dollar per year, outpacing almost double of the national average. And as we can see in the chart on the right hand side here, the labor productivity growth of Shenzhen and Guangzhou is also much faster than China and also other major economies. So this is creating tremendous wealth or income for Guangdong province. So if we can go to the next page. So the deposit growth of Guangzhou and Shenzhen has been growing at around like 12 to 13% per year in the past 5 years, outpacing the national average of 9.6%. This is because the disposable income per capita of Guangdong has been very strong. It is for Guangdong itself, it is around like 28 to 26% higher than the national average for the disposable income per capita. So given this, there is a tremendous wealth accumulated in the region, and this will translate into a very strong consumption spending power in the future. And the other important factors that is affecting the consumption level of Guangdong province is the population mix. If we look at the chart on the right-hand side here, even though the data for Shenzhen and Guangzhou is a little bit lagging, but then the overall picture should be still the same. So their working age population, which is age 15 to 64, is at around 70 or even 80% of their total population. This is much higher than the national average of around like 68%, or Hong Kong, which is a 68% as well. So this such high, healthy population mix will continue to support the overall consumption expenditure. And if we look at the other data, for example, like the birth rate and the number of newborn babies, Guangdong is always top of the national average. So this is because of, first, they have a relatively wealthier population, and second, we have a stronger social norms around the child giving birth to child, as we can see even before the end of first or second child policy. We also see that the birth rate of Guangdong has been much higher than the rest of the nation. So given all these, we will continue to see a stronger population growth in Guangdong province or the wider GBA region. So that's why we are still optimistic against the consumption spending of GBA in the near term. So and then we can move on to the next slide. So how about Hong Kong and Macau? So we also see some optimism here. So but here I'm talking about the medium to long-term optimism. Say for Hong Kong itself, in the past few years, we can see that the overall population of Hong Kong has been declining. There is an outbound migration, but then since the reopening, we also see some sort of return of labor force. If you look at the chart on the left-hand side here, the labor force has been rebounding, and for those in public administration sector, professional and business services sector, these are the relatively higher income group of of the Hong Kong labor force. They are coming back to Hong Kong, and this will continue to support the consumption sentiment in the medium term. So after the interest rate retreat, after strong Hong Kong dollar retreat on entering the rate cut cycle from the US, then we should see a rebound in Hong Kong consumer expenditure as well. So how about the Macau? If we look at the chart on the right-hand side here, the tourist arrival into Macau has also returned to around 80 to 90% of the pre-COVID level. And given Macau is the major entertainment center of the GBA region, as well as the wider Chinese economy, we will continue to see the consumption expenditure in Macau to be resilient. So, and then we can move on to the next slide. Thank you. Next slide, please. So how about the property sector? So here, property, we will also separate into two sections. The first section we'll talk about the the Guangdong province, and then we'll talk about Hong Kong in the final section. So for Guangdong province, if we look at a chart on the left-hand side here, we can see that the property price of the region is relatively resilient comparing to the rest of the region. The ASP, the average selling price, if we use the 12-month moving average to smooth out the seasonality, the ASP is still higher than the rest of the other region, as well as the major 300 cities. So the reason here is that because Guangdong province itself started the deleveraging earlier than the other regions. So if we look at the chart on the left-hand side here again, we see a earlier retreat in the property price. If you look at the red line here, and then it started to rebound. So the earlier deleveraging will also point to an earlier rebound of the property price as well. So if we look at the chart on the right-hand side here, the real estate investment of Guangzhou and Shenzhen is still performing better than the overall China. It's just because the both supply side and demand side measure has been more executed more effectively in the region. So, for example, on the supply side measures, according to the government, Guangdong had one of the highest number of of projects that is put into the whitelist that the government is encouraging banks to support their unfinished projects, and also the execution and the speed of granted these loans has been faster. So reportedly, this kind of whitelist related loans drawdown from state bank can be completed within 5 days. So all these is helping the stressed developers within the region to complete and finish home. And also the if we go to the next slide, please. There is some sort of a down payment cost across the national level, and we continue to see the first tier city in particular Shenzhen and Guangzhou to be benefited from this kind of demand side measures, because for Shenzhen and Guangzhou, their initial down payment ratio has been, especially for the second home, it was at 70% last year. It can be cut more aggressively comparing to the rest of the nation. So all this is helping the first tier or second or top second tier cities in the GBA to outperform the rest of the region. And also there are other policy helping from Hong Kong is helping the demand for the overall GBA property sector as well. So here, if we look at the policy from Hong Kong side, the Hong Kong government also scrapped the maximum remittance amount of renminbi to GBA for property investment of Hong Kong people as well. So this will also help supporting the GBA property market in the future. And also one more point here is that the replacement demand of Greater Bay Area has been stronger than the national average. If we look at the chart on the right-hand side here, the replacement demand, which is the share of residential units aged over 20 years, is at 68% in the next 10 years, and which is much higher than the national average of 64%. So given this replacement demand is stronger, we should see the property demand of overall GBA is stronger in the next couple of years as well. So next slide, please. So how about Hong Kong? So Hong Kong, we should continue to see some pressure in the near term. So if we look at the chart on the left-hand side here, there is the unsold unit chart for Hong Kong. It started to retreat but remain as the post-SARS high, which is 20 years high level. So the developers, they may adopt some sort of a flexible pricing in clearing their inventories. And if we look at the chart on the right-hand side here, even for the secondary market, the transaction has been retreating after the initial spike of in February, right after the government has cleared the demand side management policies. So this is of course because of the interest rate, because if we look at the Hong Kong interest rate, like the high boards, it has been tracking closely to the US dollar rate as well. So the high interest rate is restraining the housing demand or the property investment demand from Hong Kong from Hong Kong investors. So next slide, please. But we see a rebalancing in the medium to long-term housing demand and supply. So this is the last slide of my section, and then we will go on to the Q&A section. So for here, the rebalancing of medium to long-term housing demand and supply, if we look at the chart on the left-hand side here, we see a chart of share of mainland investors in the Hong Kong property market. So with the recent data, we can see that the share of mainland investors, they has been outpacing they have been returned or even higher than the previous peak back in 2011. So if this is across primary and secondary market, and also across the number of transactions as well as the transaction value. So say, for example, for the transaction value in the primary market in April, the share of mainland investors has already at 57%, which means even more than local investors in Hong Kong. So we continue to see a strong demand from mainland investor. And if we look at the other data, for example, the visa application data, it is now at double of the pre-COVID 2019 level. After the government has introduced the top talent pass scheme, the number of working visa application has been soaring as well. So this will continue to support the housing demand of Hong Kong in the medium term. And also for the housing supply, in the previous slide, we see that the housing supply is now at post-SARS high. But then in the next couple of years, the supply will start to retreat because in the past 1 or 2 years, the developers, they are not willing to acquire more land from the government in order to first digest their inventories. So in the next couple of years, we should see the land supply to continue to decrease. If you look at the chart on the right hand side here, so the rebalancing of demand and supply dynamics of Hong Kong housing market should continue to support the property price in Hong Kong. So we should see the property price to stabilize very soon. So that's the end for my part. Thank you very much. So maybe I pass on the screen back to Taimur first. Thank you.
Thank you, Sam. Thank you, Mo, and thank you, Nathan. Start with the property market. I had the pleasure of joining Mo in Shenzhen, Shanghai, and Beijing a week and a half ago. And we were seeing, at least in Shanghai, signs of the property market beginning to respond to some of the policy easing measures that the authorities have taken in. Additionally, we also saw signs of inter-provincial competition, that some provinces are taking more proactive roles than others in pushing for property easing measures of their own type, as opposed to the whole command and control and everybody follow the same rule. So I guess my first question is, in the Greater Bay Area, are we seeing any traction the way we saw in Shanghai in terms of response of the property measures into some degree of stabilization in the market?
Thank you, Taimur. So I think for GBA, well, we have conducted a few macro due diligence trip in Shenzhen and the wider GBA area. So from what we have discussed on the ground, it seems that the demand has been stabilizing. So we have talked to some agents and some of the other source of information as well. So it looks like the number of inquiries on asking for property prices or asking for looking at new flat job house hunting, the number has been increasing in the recent month. So it seems that the GBA property market is stabilizing. And again, if we look at the chart on the left hand side here, the property price of GBA has been recovered in the past 1 or 2 years, and then is now on top of the national average. So we should continue to see the GBA property market to stabilize moving forward. So Mo or Nathan, do you have anything to supplement on this?
From me.
Okay.
Yep.
The next question I wanted to ask, and this is part of my time with you guys in Hong Kong, that there is this economic differential with Hong Kong with the currency board and the high interest rate, and Shenzhen with the RMB and significant additional purchasing power for the Hong Kongese into Shenzhen. So share with me some numbers or some anecdotes, if you will, that show that some of the pressure that Hong Kong is facing from the extremely high interest rates is being offset by the easy connectivity between Hong Kong and Shenzhen, and giving, I don't know, a bit of a lifeline to the Hong Kong economy, which I think we can all agree does not need such high interest rates right now.
Yep. So I think for Hong Kong, the wider economy itself, I think of course interest rate is the major problem of the recent retreat or recent slowdown in the economic growth. So if we look at the retail sales, it's down by like 14-15% year on year as of March. So clearly this is the result of the high interest rate and strong Hong Kong dollar. So the Hong Kong dollar have been strengthening to against the CNH by around like 5 to 10% in the past 2 years already. So this is making visiting Hong Kong very expensive. And this is one of the reasons why retail sales in Shenzhen has been rising, sharply, while that of Hong Kong has been contracting. That is for sure one of the major reasons. And also for Hong Kong, the high interest rate environment is also affecting the property market as well as the investment as well, because the HIBOR is now at around like 4 to 4.5%, depending which tenor we are talking about. This is restraining the overall loan demand as well as investment demand as well. So we should, if the Fed is only going to cut the interest rate for 2 times this year in the second half, so then the economic growth of Hong Kong will probably become continue to be quite modest. But on entering next year when when the Fed is delivering more rate cut, and then we should see a more substantial stabilization of the Hong Kong economy moving forward.
Right. I guess the question also relates to maybe financial stability, which is, do we see signs of institutions in Hong Kong trying to take advantage of the fact that they have access to the CNY CNH market to sort of take some of their high interest rate obligation in Hong Kong dollar and swap it to low interest rate obligation in RMB? And this is more of a Hong Kong China question than a Hong Kong GBA question, but do you see that taking place?
Well, I think given the interest rate differential between China and Hong Kong, well, this is also one of the major observation that we have been, seeing on the ground as well, because right now China is the interest rate in China, so even for Hong Kong, the CNH rate is still lower than HIBOR as well. So this is quite logical for firms to swapping the interest rate between Hong Kong dollar and CNH. And also, as Nathan has been discussing in the previous slides, the Hong Kong has been, a major gateway for Chinese corporates to, moving capital in and out between, China and the rest of the world. So the currency exchange and swaps through Hong Kong should continue to to gain some traction in the near future, especially when the Hong Kong is accounting for over 60 to 70% of Hong Kong China's inward and outward foreign direct investment. So this kind of foreign currency exchange activities, especially between Hong Kong dollar, US dollar, and CNH through Hong Kong, should continue to gain traction.
Right. Can we go back to the beginning of this presentation when we were looking at some slides related to Guangdong, because that seems to be the Silicon Valley of China now. And I was sort of amazed by, number one, the way electronics, computer machinery, and so on are becoming a big part of the region's makeup, as well as sort of green-related electronics manufacturing. So maybe if Mo or Nathan could give me a little more color on the entire sort of transformation we're seeing in that region.
Nathan, you want to go ahead?
Sure. So right now, GBA, the whole Greater Bay Area, right, has, I would say it's really established itself as a powerhouse for tech and innovation, right? Shenzhen in particular seems to be at the epicenter, right? With leading tech companies headquartered there a lot, not just mid-sized, but also those giant companies, right? And together with the significant investment pouring in and all that R&D talent flocking to the city, it's no wonder Shenzhen is driving so much progress in areas like AI. And it's amazing that the city alone is home to over 40% of China's total AI enterprises. And we have been visiting some of them over the past few weeks. And in the coming week, we'll be visiting some of our TMT clients again in Shenzhen. So it's not just about the tech sector. This whole region is charging ahead when it comes to green industries as well. The adoption of EVs, for instance, in Guangdong, has been phenomenal, with the EV penetration rate hitting more than 30% in 2023. That's really impressive, right? Plus, all the ambitious carbon neutrality goals, investments in renewable energy, and leadership in green finance. It's just, it's just amazing. Yeah.
Right. And in case our listeners who are not fully well versed in China geography are a bit confused why we're talking about Guangdong and Shenzhen interchangeably, is because Shenzhen is a city in the Chinese province of Guangdong.
Yeah.
And when we talk about broader context, we sort of refer to the province, but Nathan is basically talking about just, the idea of being in the city, which of course was the special economic zone and where it all began with the manufacturing revolution of China.
Yeah. Thank you, Taimur.
Yeah. I think sometimes even I get a bit confused, especially when I look at like slide 5, for example, or rather slide 6. Things sometimes wonder which city are we talking about and where do they fit in. Okay, Mo, you were with me in our trip to Shenzhen, which took us only 15 minutes from Hong Kong to go. So this incredible connectivity that we're seeing, I mean, of course, it has been a long time coming. Tremendous amount of infrastructure investment had gone in, but now there's this fruition where this entire region is very well connected, both through financial deregulation as well as through infrastructure connectivity. But let's also be, very realistic that there has been substantial setback to the region's dynamism because of the regulatory crackdown as well as the COVID pandemic. So, do you see the region's sort of shock absorption capability to be substantial? Is it sort of coming back? Because a lot of the time, all we read in the media is, Hong Kong is struggling, China is slipping because of tech war and trade war, and things are not good. So, what's your sense?
Thank you. I really, enjoy the trip. Like, you have seen how fast the region is developing, especially, it only took like, 14, 15 minutes for you to go to Shenzhen and see the high, skyscrapers, right? So this ranks globally number 2. I think, what, after the COVID, what's really changing here, especially when you are China, the trade war starts, Hong Kong was hit the hardest, certainly. But given the decoupling in a way is happening, I think China is now trying to recouple with the rest of the world, especially the ASEAN countries, Europe, so which are their second and third largest, the fourth and second largest trade partners, and Hong Kong in terms of role itself is also re-engaging in this important transformation. So before, when China is doing the export-led growth at that time, all exports goes through Hong Kong to go overseas. But now Hong Kong is re-engaging in a way, number one, in terms of China's overseas direct investment, 60%, goes to Hong Kong. Then it goes overseas. Hong Kong continues to be the biggest ODI, place, for China. This is so important. So that is why you see Chinese companies has been setting up their overseas headquarters. The first stop is Hong Kong. Secondly, I think in terms of the trade itself, this year China, up to now until the end of May, we see exports continue to surprise to the upside, and also Hong Kong also benefiting. So Hong Kong helps, those exports as well. This is why the first quarter GDP of Hong Kong has been beating like by 2.3%. Is mainly led by exports. So given the most recent, release, the China export data within Hong Kong GDP will continue to be supported by China's strong exports. So this is why we think in terms of this overall transformation after COVID, after the U.S.-China trade tensions, Hong Kong is repositioning itself, in China's ODI, in terms of China's trade, and also in terms of regaining its power as the financial center. And this is very sure from the China's state leadership. Hong Kong as international financial center will never be changed. So it's very important as China's gateway, as China's window, to be collaborative with the rest of the world.
Thank you, Mo. Let's go to slide number 11. And in case no one noticed it, when I was reviewing this report, this slide to the right-hand side of slide 11 really caught my eye. I was a bit worried what was happening to EV sales in China, given that we are hearing about, it being a powerhouse and it's creating a lot of ripple in the global EV market. So what's going on? Why are EV exports down 55.6%?
First of all, that is because of the high base last year, 2023. the growth was super strong in 2023. So that is one of the reasons why we see this drop in the first quarter of this year. This is number one. And number two is that the demand is sort of moderate a bit because of the trade frictions between China and, for instance, the US and Europe. So that explains. But more encouraging is the traditional sectors, which drove the growth of Shenzhen export in the first quarter, like those phones, computers and home appliances. Yeah. In terms of volume, that is huge because, yeah.
Right. I mean, Nathan, the dollar value or the RMB value actually are not that big, and I'm sort of still remain a bit perplexed by that because we're talking about these are RMB numbers and a whole quarter, and all we're talking about is barely 80 billion in phone exports and virtually no exports at all on EVs. Like in US dollar terms, we're talking about 10 billion. China is like so big. I think of China always in the context of hundreds and hundreds of billions of dollars worth of exports and hundreds of billions of dollars worth of imports. How come these numbers are so modest? I mean, are we missing other parts of China which are much, much bigger?
Some other EVs were exported from, for instance, Guangzhou. So not only Shenzhen is exporting. So that's why there is a chart that showed Guangzhou's export of EVs in the previous section. Can we turn to that? So that might be a better chart to show the big picture. Yeah, this is the next one, please. No. Next one.
I don't think it is put in this.
The one on slide 9. Oh, that is in terms of sales revenue, right? Yeah, for the whole Guangdong. But anyway, Shenzhen is not the only city that is exporting EVs, but also, Guangzhou and some other ports. And there are also some other major ports in Shanghai as well.
Yeah, I would think Shanghai would be one. I mean, to me, it was very striking when we were in Shanghai that you don't even have to bid for a green license plate there. So production there has been massive and absorption within Shanghai has been substantial. And, I'm sitting in Singapore. We're beginning to see more and more Chinese EVs. And I think this is just the beginning. This is just the beginning of the process of massive exports out of China into parts of the world where it is still going to remain open. In that, I think the Middle East, Southeast Asia, Africa, Latin America will remain very much amenable towards EV exports from Shenzhen or Shanghai or wherever, China in general.
Yeah.
And also, let's be clear that the companies in Shenzhen, some of whom already are looking at the rest of the world, whether it is in Mexico or Poland or Hungary, to start production. In fact, I was in Indonesia right before my trip to China, and BYD has already started its manufacturing footprint being established there. So it's the GBA and associated areas know-how being exported to the rest of the world, and second is the actual exports itself, which of course, and as you pointed out, on the computer side remains still substantial.
Yep.
I agree.
Indeed, indeed. Okay, I think we are sort of running out of time, and I am sort of running out of questions. Mo, any final words or thoughts on the GBA? You attended the GBA conference along with our colleagues last week in Shenzhen. How did that go, and what kind of corporations did you see attending? What was the vibe there?
Yes, I think, the GBA conference hosted by DBS was very well, attended, it's very big crowd, I think, in terms of the GBA integration, either Hong Kong into GBA or GBE, the Guangdong part into Hong Kong, but that's only, from the appearance. So what really happens, what we are really seeing is Chinese companies now enters into a stage, they truly, have to go overseas, for investments, for, selling their products. So this is why we see a strong demand, from the conference. The Chinese companies are seeking the ways where they put their, factories, how they can make money locally. So this is something that's truly happening. I think before, at the beginning, for China's 30 years of reform at the beginning, those companies go overseas, they are just trying. But at the second stage, they are making some profits. But now it is a must. You have to go overseas to look for opportunities.
Yes, certainly we picked that up even during our Shanghai and Beijing trip. Even in our interaction with government officials, we felt that that was a strategy, which is take the know-how and go build elsewhere as well, not just try to build in China and export, because then it becomes a good foreign policy tool as well, that China is seen as a country open to technology transfer as well as job creation overseas, not just domestically. Very good. We will continue doing research on GBA. Lots to do, particularly from our business perspective. Also, it's a fascinating development. It is not a one-way street. It has faced pitfalls. It will not remain a one-way street. It's not the easiest journey in the world, given the world that's becoming more and more closed. But it is profoundly transformational, and I hope you enjoyed reading the report. And I hope this webinar was useful. Thanks, guys. Mo, Sam, Nathan, Byron. And to everybody else, thanks for attending. We will see you next time for yet another macro insights webinar. Bye-bye.
Thank you.
Thank you, Taimur.
Bye.
Thank you, everyone.
Right.